If you're a bull, you can find plenty of stats that will support a bull case. And if you're a bear, you can find plenty of stats that will support a bear case. And here's a perfect case in point. Let's talk about the consumer. There was a big headline today that said that consumer credit card debt is, through the roof. But yet at the same time, the percent of credit card debt relative to the money in the bank, though, that people have is near the lowest it's been in 20 years. So there is money there. Consumers have money. So a lot of what happens in this market is going to be where the consumers decide to spend their money. And that's, I think, I have a theory on that we can talk about. But all of this is all well and good. If consumers actually, even though they're doing credit card debt, and that's kind of that doom spending that people are talking about, they still have more money to spend, and they're spending. Inflationary. And that's just the obvious economic consequences of a robust economy, is that it does come with some inflation. And so I think this 2% rate that the Fed is focused on, and not that I have any of the background that they have from an economic standpoint to criticize the Fed, but I think 2% is unrealistic. If you want a growing economy, you're looking more like at a 3% inflation. So that's the perfect world. Now let's go back to where inflation has been. Since June, CPI bottomed out. Globally, we still have inflation problems. And then if you take a look at, obviously, what's happening in the Middle East, that's certainly far from resolved. The Ukraine, far from resolved. So BRICS, which now even Janet Yellen has mentioned, is a concern to her. We have all these floating balls that can take the inflation and do what you and I thought might happen, maybe sometime more towards spring and summer, and that's another spike in the super cycle. Short of that happening, even if we just trickle up a little bit in inflation in a more controlled fashion, they'll probably stay paused and not raise ahead of an election, and also knowing that there are things that could easily break in the economy. And at this point now, they've achieved some kind of a normalization. I can't imagine they would want to upset that apple cart. And given a choice, and again, unless it was some crazy inflation spike because of a war or a weather event, they probably would just say, we're not lowering yet, but we're going to keep things the way they are. I think they would want to save the economy from a collapse. Well, on X, it's at Market Minute. I have a LinkedIn page where I post a lot of the content. That would be under Michelle Schneider. I have an Instagram account, and we have a website, which is marketgauge.com. Everything is posted there. So that's how you get to a lot of the content that I put out, which is Mish's Market Minute Daily. Plus all my media clips, including this one, will go on our website as well if you ever want to watch. I kind of put a description in the daily of what we've talked about, the main highlights. So if something interests people, they can always find the clip and listen to it.